Now, I'm an adult in a spaceship with lots of other wonderful adults looking down to our beautiful, beautiful Earth.
Good morning, good afternoon, good evening, guys. I want to say welcome to the Trading Success Show. If this is your first time, you're welcome, and don't forget to consider subscribing to the channel, and I will be bringing more content your way. So you're welcome. And also, this is your boy Francis. Welcome again to the Trading Success Show. Well, what I'll be talking about today is going to be long-term stocks that you can have in your Roth account, your long-term account, or whichever kind of portfolio you have. It just doesn't matter if you're buying $100, $200, $300. It just doesn't matter. Okay, I have built my long-term account from $2,000 to $30,000, again from another, $2,000 all the way to, $6,000. That's what I'm currently doing right now, because I have different accounts, long-term accounts, and I also have risky play account as well. But what we're gonna be doing today, I'm gonna be giving you list of stocks that I think can double or get you more than 50% in the next coming year or two. This is not a recommendation. This is just for entertainment purposes only, guys, and I hope you enjoy this. Now, with the sector being green, most of these sectors are all green, right? So we're gonna be looking for stocks that I believe can appreciate in the long term, stocks that I think can also grow in terms of price. Okay, so these are the stocks I like to have, like 10 shares, 20 shares, 25 shares when I'm building my portfolio up. And some of these stocks also have what I call dividend. They pay out dividend as well. So let's get into it. The first stock I will be talking about here is going to be SPCE. Okay, SPCE is Virgin Galactic. The reason why I said is Virgin Galactic is because of what happened this past hours or so. So for this one, I do like the fact that we got this area right here on Virgin Galactic. Okay, if you had bought Virgin Galactic just around this area, I think you're making money twice your entry at this point in time. So, but still, there's still room for this company to grow with space tourism and all that. And I'm happy how they accomplished the mission on launching the Billionaire, into space. Let's take a listen.
It's down there. I was once a child with a dream, looking up to the stars. Now, I'm an adult in a spaceship with lots of other wonderful adults looking down to our beautiful, beautiful Earth. To the next generation of dreamers, if we can do this, just imagine what you can do. Hey!
Come on out, mister.
Well, you're welcome back. So pretty much I'm looking for this area to break out on Monday, and I'm looking for more profit into the $62.50, $65 on this name. And if you want to play this, I think it's also good to instead of taking full size, you can take half of your initial size. If you're going 20 shares, you want to at least buy 10 shares and then see if we pull back, and then you get that remaining 10 shares. The next one I'll be talking about for long term is Palantir. This Palantir, I've been buying Palantir left and right. The reason is because ever since we're around this $17-18 spot, I've been buying Palantir to hold for a long term. Because why? Cathy Wood is also buying Palantir, so keep an eye on Palantir as well. I'm adding on every pullback on Palantir because I think this is a $50 to $100 stock in the long term. This is not for the short term, it's for the long term. I think right now I have like about 400 or 500 shares right now, so I'm still adding to my position, and then we hope that this push higher, but it's for long term, guys. The next one I'm holding for long term is going to be FUBO, FUBO. This one, the same pattern. I'm expecting this area to hold right now, which is our 50-20 exponential moving average. We are above the 200 moving average, which is also a good thing. Right now, look at what happened here on this trade, that this spot right here is going to be our support, which will bounce right off. Now we just need to reclaim this 20 EMA, and we should be good to continue pushing higher. Target is going to be this area again, so that we can retest this $35 spot and see if we can continue pushing higher. I will be adding to my position on FUBO. Okay, I think I have currently about 400 shares on this one. I will continue to add on FUBO. The next one I'll be talking about is going to be Apple. Apple, I've been in Apple since the $125, $120 dollar spot, and this is for long term. This area right here, I only sold a few because we couldn't break through this spot, right? This 135 spot, and I took some of my position out and added around the 125. So right now we're just growing and growing and growing. So we're looking forward for this 145 to break, and the 145 broke. So the next area I'll be looking for is the 150 spot. For Apple, it's also good if you're that kind of person that likes to trade Apple in terms of options. I will be looking for a leap option. And now, what is a leap option? A leap option, let's go into it. Leap option is a long-term equity anticipation securities, right? So a long-term anticipation securities are publicly traded options contract with expiration dates that are longer than 1 year and typically up to 3 years from issue. So for me, I like to go for more than 6 months to a year or 3 years. That is how I like to go in terms of leap options. You can sell calls, you can sell puts, you can also long calls. But if I'm going long calls on good names, good company, I like to go, I like to actually use the leap in this term, because delta is also in my position. What is delta? Delta is the ratio that compares the change in the price of an asset, usually marketable securities, to the corresponding change in the price of its derivative. Right now, let's take away. Takeaways mean delta expresses the amount of price change a derivative will see based on the price of the underlying security, meaning your stock. Right now, delta can be positive or negative, being between 0 and 1 for a call options and -1 to 0 for a put options, right? So for me, again, I like to see my delta at around the 30%. Okay, I like to see it around the 30%, or something that is a little bit more than 30%. That's how I like to see my delta at, right? For example, if a put options has a delta of -33, right, 0.33, and the price of the underlying asset increases by $1, the price of that put options will decrease by 0.33. Okay, so for example, if you have a positive, if you're going on a long call and your options or the delta is showing you 30%, which is 0.30, every time that stock moves 1 point, you're making what? 30 percent or 30 dollars as it pushes higher, right? Which is 0.30. So 0.30 multiplied by 100, that is pretty much $30, right? So typically the value of the options data is the first derivative of the value of the option with respect to the underlying security price. So delta is often used in hedging strategies and also is referred to as hedge ratio. So let's go back into this apple that I was talking about. Now this area right here, this is the delta, right? So this is our delta. So everything right here is our delta, correct? Now if you go into this, let's say we want to actually go for the leap, we want to go for 6 months outside, right? I do like to buy options that are in the money. That is what I like to do. But in this case, if we want to go just for call options, I want to be looking at the actual strike price on Apple, right? So with that being said, we have to look at price that are really within our actual underlying price, which is right now is 145, and the earnings report they are pricing in, which is also called, the market makers are pricing in $1.35 on the options. So they are pretty much pricing in this will go 146 35 or down 144 35. That's what they are pricing in, if you guys don't know that. So for our delta, this is our delta, right? So let's take a look at one of them right here. Let's say we're going in, say 150. Okay, 150 is gonna cost us what? Between 935 and 945, which is pretty much a 10-cent spread. Okay, so this 10-cent spread meets our criteria. So this 935, let's use 935 for example, is going to cost us $935 to actually buy these options, right? So with that being said, this will expire the 21st January 2020, right? And it's going to be 150 call option. And guess what? Now let's go take a look at it. If you look at this chain, this is pretty much the highest in terms of the volume traded the last trading day. So this is 3,800 compared to this 3,700. So people are actually thinking, okay, this will go to 150 or it will go to 180. For me, 180 is way too far from what I currently have in terms of my criteria, right? So for this one that has the highest open interest and also the highest volume, that is what I'm gonna go for on Apple. So I'll be spending $935 in order to get one options contract of 150. And if Apple goes up in price, then I'll be looking at my delta of 47 cents, right? So for me, I wouldn't look at this one because what, they are really not within that 30% delta, if I may put it that way. So I'll be looking at this between this 160 down to this area, right? But in this case, we're going to be looking at the 150. So the 150 is going to give us 950, and every time the stock move $1, we're making $47 on our option. So that 935, you're gonna add that delta over there, and you make that money. So if Apple goes down, then you're gonna lose this 47 cents, right? Which is 47%. So with that being said, if you want to go to options, you look for names that you think we appreciate, and also good names to to really buy call options in, and 6 months out or a year is also a good deal in terms of options. So that is it for Apple. I expect Apple to still have this huge amount of juice fuel to continue towards the 150 on Apple for the coming days, because right now we are in the overbought zone, which is understandable. So the risk is still gonna be there. Okay, so that is for Apple. Next one is going to be NIO. Keep an eye on NIO. The reason why NIO really pushed back the other day was because of the Chinese issue, but for me, I think NIO is more like $100 stock. So keep an eye on NIO, because I do like NIO. We failed this this trend, and now we're supporting here at the 50 exponential moving average. Right now we just need to get through this 47.50, and then we'll continue pushing higher. Because why? Because at this point in time we're actually making head and shoulder, which is a bearish technical chart pattern. So if we can break through this area 47.50 and then push towards the 48, then we are breaking the head and shoulder, the right side of the shoulder, on a bullish move upside. So keep an eye on NIO. On NIO as well, on the call option side, I'm also thinking about the leap options as well. Also pick up some close to the money. Right now we're trading at 45.53, so our 30 delta is going to be right around here, which is the $65. Okay, so the $65 call option is also this one, but you know me, right? I like to go to options that are really close in the money. Okay, so I'll be looking at perhaps the $50 call option, and that's gonna be about 10 cents spread, which is 710, 720, and guess what? We have 52, guys. So within the next, say within the next 6 months, they're expecting NIO to be around $50, 50%. So, and also if you take a look at it, we'll also have volume, but the highest on this chain is this one. So people are thinking NIO is gonna get to $60 by this date. So keep an eye on it. Options is pretty much Hennings is pricing in $1.80. So up $1.50 or down up $1.80 or down $1.80. So keep an eye on this one. I also like this one. If you want to go further in, so maybe looking at the $60 call, you can decide to go for the match if you want. That's 250 days out, and you're looking at 60. But the difference between the bid and ask is also too much. So you see how people are buying this 55 into March of next year. Next one I will be talking about is KO. This is Coca-Cola. Right now, Coca-Cola has a good setup right now. Look at this area, guys. This is the left side of the head. This is the head. This is the left side of the shoulder, and this is the right side. I think we're about to break the right side towards that $55 spot. So if we get to $55 spot, I think we'll be able to push towards 56. Overall, keep an eye on Coca-Cola. This Coca-Cola is for the long term, and I think on Monday I'll be picking some around this area just to hold in anticipation of the move higher. MACD is calling up, and guess what? RSI is at 51%, so I'm really good on this one. Checking the options chain and see what the big boys are buying, because most of the big boys, they normally edge this one as well. So if I want to make premium, then I can go for the credit. I can go for the call, sell the call. Okay, and in order for you to sell the call, you need to have at least 100 shares of Coca-Cola. Okay, right now Coca-Cola is trading at 54, so which you have to have 54 times what, 100. That is what you need to have in order for you to sell your call. and then you make premium out of your call at the back. So for example, you're going for the 55, let's say 57, because that is our 31 delta, right? So which is $1.32, $1.26. So the spread is really good. So if you're going for this, then your premium out of the back is $1.32. Okay, so it's gonna take a while for Coca-Cola to get there, because it's a slow growth kind of stock, but they still pay dividend, right? So keep an eye on Coca-Cola, right? The next one is going to be NNDM. Keep an eye on NNDM. Reason is because Cathy Wood is also a big proponent of this nano dimension and all those good stuff. So keep an eye on this one. I do like it. The fact that we're about to reclaim the 200 moving average. We reclaimed the 200 moving average here and then push higher. Right now we're doing the same thing, and I'm expecting price to still push higher on NNDM. This one is very cheap. You can buy 100 shares for $7.27. And just hold this one. So I don't have any position on this one. I'm expecting come this next week to pick up some on NNDM for a long term. This is not for a short term, because if you take a look at the let's take a look at the maximum in terms of NNDM, and we go into, say, let's look at the weekly, guys. Look at that, right? So right now we pushed all the way down to, guys, 51 cents, right? And right now, see what the stock is really doing right now. Okay, the stock is really trying to hold this trend. So we need to push off this trend into this $12 spot. So I'm looking for this to get back to $10. So for the next 6 months, I think we'll be able to push towards $10 or even the $12 on NNDM. Overall, I do like the stock, because guess what? That is huge amount. Look at where we had before, 89.50. So I'm looking for this to still really push on NNDM, guys. And pretty much we have also Boeing. Keep an eye on Boeing, because right now we have all these issues with the flight and all that. So I'll say keep an eye on this one. I have position on Boeing. The reason is because we pulled back to this 226.72, which is our 200 moving average, and then we bounce right off, just like we did here on Boeing, right? So I'm holding some position. I'm expecting this 2050 EMA to break, and then we get towards the 245 this coming week. I'm expecting Boeing to get towards this 245, 250 even. If 250 comes, that's a good thing as well, right? So for this is going to be like a long-term hold for me, and picking up 10 shares is not bad as well. Picking up 50 shares is not bad, and just hold it for a long term and see what it does. If you take a look at it on Thinkorswim, let's look at Boeing on Thinkorswim, right? So pretty much the highest price on Boeing is 446, right? 446 and a penny. So I'm looking for price to get back to at least this area. Okay, this is the left side. If you take a look at it, that's why I said it's very important you look at the technicals. Even if you're a long-term investor or whatever, you look at the technicals. Take a look at this left side. This is the left side of the shoulder. This is the weekly, right? And this is the right side of the shoulder, and this is the head. Guess what happened? This is what we call, a reversal pattern. So we couldn't hold this area, the right side. We couldn't push through this spot right here. We just failed and just boom, we'll pull back down, right? So right now I think I'm expecting price to push higher on this one, because this is also what, the head, and this is the left side of the shoulder, and this is the right side. So I'm expecting price to to push higher towards the 290 spot in the next 6 months. If we cannot hold this right side, Okay, if we cannot hold this right side, then we're going to fail back down. And if we fail back down, that means we're trying to work the same thing that we did here again, right? Which for me, I really don't want, right? I want, Boeing to actually, push higher and then test new highs, just like we have Netflix and all that, pushing higher and higher. And we have one last one here is going to be our Starbucks. Okay, Starbucks, we're already pushing on Starbucks. So the area that I got in was around this spot right here when we were breaking out, right? So I said, I'm expecting this to break out, and we did break out into this resistance. So just look for price rejection around this area. If we can pull back to the 116, it's also a good spot to pick some up on Starbucks, because if you take a look at Boeing, that is the same thing I'm expecting Boeing to do, just like what happened to Starbucks. So keep an eye on this one, guys. Well, if you've enjoyed this session, guys, this is my Twitter. Okay, if you have any questions, concerns, just email me at tradingsuccessshow@gmail.com, and you can follow me on Twitter. You can follow me on StockTweet at FRONKTSS. Guys, this is your long-term portfolio, and I hope you enjoyed this session. Consider subscribing. If you have any questions, you got my email, you got my Twitter account, and just message me, and we can talk, we can discuss, we can talk stocks, right? Have a good one, guys. Peace and love. Bye bye.